Despite what's happening with momentum names, NVIDIA seems like it's lost its momentum. Reporting earnings on Wednesday, that stock treading water lately. Deepwater's Doug Clinton here on set with his expectations. Good to have you here. So we've seen what's happened with the momentum names, which I'll get to in a minute because you've got some of those in your portfolio. But what about NVIDIA? What should we expect midweek?
I think you have to look, Scott, at what have we learned since DeepSeek. I mean, DeepSeek is really where NVIDIA went off the rails and sort of lost its momentum permanently. And we've learned two things. One is that basically all the hyperscalers continue to spend. And in fact, if you look at the beginning of the year, what the expectations were for CapEx on the hyperscalers versus now, it's up about 30%. So not only are they still spending, they're spending more. We've learned that. The second thing we learned is Jensen actually just gave an interview last week where he said he thinks investors got the DeepSeek thing completely wrong.
That's right. He makes the argument that this is all going to lead to more compute, not less.
More use.
Which really echoes some of the commentary we've gotten from CEOs of the hyperscalers when they've spoken over the last couple of weeks.
That's right. I mean, everybody has basically come out and defended that this CapEx boom is going to continue. NVIDIA's report will sort of be the final verdict, I think. And I think if you put all of what we've learned together, it seems like the report should be fine. Will that be enough for the stock to move up?
That's you use fine. I mean, fine is probably not going to be good enough. And much of the commentary, certainly today, is that the ability for NVIDIA to beat and raise at such a magnitude as they have in the last couple of years is going to run its course at some point. And the market's going to have to decide if that's okay.
I think the expectations going into this quarter, though, use the word fine. Fine might actually be enough, because I think there's more fear going into this quarter about NVIDIA, because everybody knows if you're following AI and you've seen the DeepSeek thing, you know that if they have a bad number, the stock's down 15, 20%. I mean, it will get crushed. So I think there actually could be an alleviation of fear if numbers are just fine, and they could be better than fine, I think, given what we're seeing again on the CapEx side.
How about the market overall right now? When you look at the correction that's taking place in momentum, these are the growthier, more expensive, in many cases, technology-focused names outside of the Mag 7.
Yeah, you think about this report from Microsoft and them potentially cutting CapEx spend, they say they're not. I actually think that's a reflection of the broader attitude in the market. The vibe has shifted. And I think investors in the market more broadly, they sort of almost want to believe that the AI trade is over. They're looking for evidence, reasons to doubt. And so I think that's the hard thing for this trade right now. Momentum has lost its momentum. From our perspective, the AI trade is still real. I don't think this boom is over. I still think we have 2 to 4 years to go. But we always go through these periods in technologically driven booms where you have doubt. That's a healthy part of the cycle, and I think we just need to work through this doubt. Maybe NVIDIA earnings get us through the other side.
I don't even know, quite honestly, if it's doubt more than it's questions about just how fast these stocks ran up, a lot of them. The Palantirs, the Arista Networks, which you own, for example. I think there's still great promise from the investor class and the investor base out there, but that still might not justify the valuations that a lot of these stocks traded to.
I think that's fair, but I think you have to also kind of compartmentalize them in two ways. If you think about the hyperscalers, those valuations, I think, largely are still reasonable, even though they're a large percentage of the market, which makes people concerned. I mean, we're talking about mid-20s PEs for them. Some of the other more growthy momentum names, I think some of those still have more upside, that the multiples look expensive now, but as they continue to grow, and that is the fundamental question, those multiples actually will appear higher than they will be in the future.
Well, I mean, you could look back and say NVIDIA is a good case study in that, as the company experienced incredible growth and their guidance through these last couple of years, the multiple has come down. But the multiple of an NVIDIA, for example, wasn't nearly as high as the multiple of some of the stocks that we've been talking about out of the momentum space that are still undergoing a correction.
That's right, and I think you have to pick and choose through that space. I mean, we just talked about Palantir briefly. I mean, that one, I think the multiple is really hard to justify. We've owned it in the past. I think it's a great company, but it's hard to pay. I think last time we looked at it, I mean, it's over 60 times sales, if I remember correctly. That's a hard multiple to justify. Some of the other names where I think it is more reasonable, maybe you're paying 30, 40, 50 times earnings, I still think you might have upside to growth there where that number is not actually as high as it appears.